Oh, well, hello there. I'm Prince Charming, of course, here to give you a nice little update on the top stocks that you should be looking at October 2019 edition. And no, this isn't just Cameron wearing a Prince Charming costume, this is me, wanting to teach you how to become a wealthy aristocrat just like me, all today on Young Money Investments. Alright you guys, welcome back to Young Money Investments. In today's video, yes, I am dressed as Prince Charming, but that is all because it is October 2019 and we are talking about the top spooky stocks to make you lots of money, right? We're going to be talking about probably 3, maybe 4, I'll maybe throw in a 4th stock for you. I want to talk to you a little bit about Starbucks, Uber, Roku, and Overstock. We're also going to potentially talk about you guys. If I don't, and you really do want me to do an analysis on you guys and how to swing trade this, leave a comment down in the comment section, and also smash that thumbs up button here for Prince Charming. That would be greatly appreciated. I would love that if you can. But without further ado, I want to provide you as much valuable information as I can in today's video and really jump into this. So let's jump to stock number 1. So stock number 1 is going to be kind of done in order of most risky to least risky options that I see for these 4 tickers here. First one we're going to talk about is Overstock.com. This is one that has sold off quite a bit over the past probably 3 weeks, maybe a month or so. And so I want to talk to you a little bit about the potential and why I see this reversal happening right now as a very lucrative opportunity, but also poses probably the most risk out of all 4 of these trades. Taking a look here at the ticker symbol, we can take a look at Overstock, and as you can see, not too terribly long ago, we were looking at highs all the way up here of about $29, almost $30, and we have come down, I mean, you guys, it's a lot. We've come down probably, if you come from highs down to the bottom, we're talking about a 68, almost 70% drop. And since the bottom, we're talking about a run up of about 30% or so. So there is a lot of room even from here to run up to the next level of resistance. I see about a 24% return on this. And one of the reasons why I see this obviously as a very risky play is because there's a lot of short sellers in this particular ticker. So that is one of the things that has made a lot of people some money. It's also lost a lot of people money. There's currently a lawsuit pending against Overstock because the way the CEO dumped $90 million worth of shares on people. So as you can see, RSI was extremely oversold down here. I probably should zoom out a little bit. We're going to just zoom in on this section here. We'll just zoom in a little bit more, and then we can kind of see this a little bit better. So as you can see, we're starting to find the bottom here. We found a bottom roughly right about 920. Previous level of support was over here at about 896. So again, before it had this massive run up, we had a low of about $9, and right now we're seeing a low of right there about $9. So we saw that level of resistance or kind of support actually, and we're starting to see this run up. The reason why I think this is now finally going to be deemed a buy as opposed to, you know, it's a little too risky to touch is because we're finally starting to see this curl. And as you can see, we're starting to see almost a cup starting to form. Now, you're going to have to watch out for a little bit of resistance right here because that's where this cup is kind of will come up to. And so if we see it up here, I wouldn't be opposed to buying and then selling part of my position after making about an 8% return and then letting the rest ride all the way up here to about $15. The reason why I would say to do that basically is because that mitigates a lot of your risk. That cup and handle will most likely form a little bit of a resistance right there up at about 1267, 1275. We'll probably see a pullback and then you'll see it start to push up again. So if you really want to, you know, play it in and out, I would say, you know, sell a decent amount of your position right there, buy when it pulls back a little bit, and then ride that up to that 15 or 1475 $15 mark. The one thing you do have to be careful with is making sure that this stays above the EMA. So I like this trade because it is holding above the EMA. If it starts to look bearish again and pull back below this, I'd say you need to cut your losses on this because as you can see right here along this whole entire time it's been selling off, it has tried, it sold off, tried to recover, got rejected by the EMA, and then continued down, held below the EMA, tried to break above, and then got rejected again. So we're finally seeing this push above the EMA, and that's why I think this is a great potential buy here in the month of October. All right, you guys, next ticker that we're going to be talking about is none other than Roku. Now, Roku is another one that has sold off in the recent about 3 weeks or so from highs of 176 to lows of like $100, a little bit lower, right around 99. This is a ticker that a lot of people have been very interested in. This is one that a lot of those, I would say, newer investors got really hyped on and rode this sucker up and thought they were invincible, and then probably got their shorts just destroyed. So one of the things that I've been looking at here on Roku is that we are starting to, again, just like on ticker symbol OSTK, we are starting to finally see this trend above the EMA line. So this is very important, and I'm going to zoom in a little bit more here. This is very important that we're starting to see this trend above the EMA, as this can pull over, and again, we're on the 4-hour 180-day chart. As this can start to trend above, and we're starting to see the volume increase. If you look at these volume candles in the blue back here, we're starting to see an increase in volume. We're seeing more of a push over this EMA line, and if this can continue to hold, we can easily most likely see this come up here to that $124, $125 range. So if you're buying down here at about 107, 108, you're able to ride it up to about $124. You're looking at about a 15% return. I love the potential for profit. And then if it sells off anywhere below, I would say anywhere below this, taking a 4% loss, you probably should stop out. Now, those that are really wanting to hold on for long, really see long-term potential and want to hold the bag a little bit longer, take a little bit more risk, you could easily hold it down here to about 98. That would for sure be my biggest point where I'd be like, okay, I gotta stop out, because when that floor breaks below 98, you're done, or $99 basically. You are in uncharted waters, difficult territory. So this is a ticker that I see a lot of value in. Again, I think that with this massive sell-off we had, we're talking about a sell-off here over the course of a couple weeks of about 42%. So actually probably like closer to 50, 43, 44%. So this was a massive sell-off, and does beg the question, basically, how much potential risk am I willing to take on in order to see a very sizable return? The one thing you do to watch out for is the October effect. Obviously, during the month of October, we do tend to see lots of sell-offs. As of this month so far, we haven't seen anything crazy happen. We've just seen kind of a continuation from the month of September. All right, you guys, now this next ticker is a ticker that I honestly and truly would like to hold for a couple years. This is honestly and truly a buy that I would like to most likely swing, but also take a portion of my position and hold it for the long term. And this is going to be ticker symbol UBER, also known as the king of ride sharing. Now, with a lot of IPOs this year, they have seen quite a beatdown. Taking a look here at the charts, we can see that it IPO'd over here at $44, sold off dramatically, had this run up ride, saw highs of 47.54, and we are now currently sitting around our lows of 28.31. So what is my reason for wanting to long-term invest in Uber? Big reason is ride sharing is going to continue to become more profitable and popular, because as more people move into that segment, the profit margins can increase. Uber, just like Tesla, is working on a lot of autonomous driving, a lot of cars that can actually self-drive that will cut out the cost of having to pay a driver. I think if you are holding long Tesla and Uber, you are basically holding the two largest players in the autonomous vehicle space at the current time. Now, of course, there's always Google. There's also going to be other startups and other companies, other car manufacturers that are going to be getting into this space. But I think at the current time, I think holding a company like Uber long-term, especially at these lower values, is a great opportunity and a great play. We're talking about right now, Uber is sitting at roughly about 30 to 40% below its IPO value. They had to drop their IPO quite substantially because of Lyft. And so I think picking it up at this price, you are really getting a substantially strong and very valuation, basically, or value for the piece of the company that you're basically getting. Now, basically with Uber, I'm looking at picking it up right here. I love, especially right now, that we have seen this break above this 28 level right here, this $29 level. We saw it break above, We saw it come back down today, and we're seeing it hold right here on this roughly 29.20, 29.19 level of support. Now we've seen it wick below before. We've seen it pull down here at about 28.75 kind of and hold. But if we can see this level of support hold, you're getting it at a great price. And even if you're just swinging this to 32, I mean, you're talking about a 9.26% return. And then from there, you know, obviously the sky's the limit. You're able to ride it up to the next level of resistance, which is going to be right up here at about 37.30, 37.40, and we're talking like a 27% return. So lots of potential if you can afford to actually hold this through kind of for several weeks, if not a month or more. All right, you guys, and last but certainly not least is going to be ticker symbol SBUX, also known as Starbucks. Now, I have never invested in Starbucks personally. This is one of those that I always thought there wasn't enough of a move or enough of a potential for return. And honestly and truly, you're right. Like, there's not a whole lot of potential in this current ticker, but that's what I like. That's why I think this is probably going to be the most conservative play that you could potentially have in this month of October, and that's because the movement does not change. There is volume, but there's not a whole lot of movement in comparison to some of these crazy volatile stocks like Overstock. Now, if we do take a look here at Starbucks, we can see again, just like some of the other tickers that we've talked about, we've seen this kind of like pullback. We saw this pullback, this drop. We saw a run up over the past few days, and we're seeing it kind of consolidate again right here. We're looking at 84.80 roughly as this level of support. Now, if you can pick it up down here at this level of support, I think your risk to reward is going to be down here, 83. So you're risking about another dollar or 1.87% for your next kind of level of support. Like I said, you're kind of using this level of support over here. So if we can see this level of support hold right here, I think our next level of resistance is going to be up here that offers about a 8.5, pardon me, percent of return on this particular trade. Risk versus reward, very little risk on this downside. We're really kind of getting in down here. If you're going to be a little bit more conservative, I would recommend basically holding or buying right here above the EMA. If you can get in above the EMA, you're still having a decent amount of return right here while still playing with a little bit less risk. Again, always wanting to buy above the EMA, I think, is my personal recommendation if you want to mitigate your risk on these particular trades. The other thing, honestly and truly, with Starbucks is it is one of those nationally massive big brand companies. They've went through a little bit of, you know, kind of like stalemate where they've obviously had not great PR. A lot of people have been bagging on the fact that their profitability and all these other things aren't really there. But I think from a swing trade, a technical standpoint, there's a lot of potential and a lot of profit to be had with trading Starbucks. Again, nothing near some of these other tickers like Uber, Roku, and Overstock, but there still is a lot of potential for profit with very little downside, in my opinion. Now, again, these are just my opinions. Don't take them to the bank, but also do your own due diligence and your own research. All right, you guys, I hope that was helpful. I hope that was enjoyable. Hopefully you took something from this video. If there's other stocks that you're looking at for October 2019, please let me know down in the description. And if you've not hit that like button, please hit that like button, leave a comment down below, and subscribe to the channel. I know a lot of you guys are watching these videos, but you're not subscribing. I want you guys to subscribe and be a part of the community, and I will catch you guys in the next video. Bye.